Okay everyone, so welcome to another live streaming session. So this is going to be a very insightful session for you guys because we are going to show you, let me check a couple of things. Okay, the stream is up and running. I'm sorry for that interruption, but I need to check it once in a while. So all good. Yeah, the stream is up and running. Okay, so this is going to be a very insightful session for you all because we will show you a live trade which we have taken in the New York session, and we will give you a live pre-market live trade analysis post-market, so that you can use these concepts and apply it into your own trading. So we will show you how institutional level traders are making decisions and how we take our trade decisions and a complete trade breakdown, because this would help you to uplift your trading skills. Okay, so let me double check again the live stream. Yep, all good. Okay, amazing. Right, so basically what we will show you is, let me take the charts now so that you could get a live recap of our trade decisions which we made. Let me make the chart more smaller so you can see clearly what is over here. So I need to bring this chart a little towards this side so that it's not covering the canvas. Hold on guys, so let me just bring it a little bit towards this side so that I need to make sure that it's covering the entire canvas so that you could see the entire chart. So bear with me guys for this. Let me, maybe I will just adjust it like this. Okay, so now in this analysis, basically what you see here is so I will show you how the entire trade was taken so that you get a clear idea. Now this first chart what you see over here is the weekly volume profile chart. So these are the weekly candles of micro mini Nasdaq index futures. So you can see in the weekly chart over here, in the weekly volume profile, you can see the price pushed down in the weekly chart, and you can see in this area the price was in a retracement. Now this is the most recent chart what you see over here, live chart, right? So you can see a live breakdown. Now you can see, okay, over here when the price retraces in the weekly chart, in this weekly candle you can see the price started pushing down. Now this gives us an idea that this retracement is somewhat over, and then when this current week started, what were the possibilities? So looking at the volume profile, you can see the volume point of controls during the retracement were moving up. However, because this bearish weekly candle, right, and because of the possibility of this retracement being over, so then the possibility, one possibility for this week is for the price to push down towards this volume point of control or this volume point of control. Now why is it? That's because price always like to find fair value. So these volume point of controls are mainly the fair value. So if the price has a possibility of pushing down, then the price is looking for the next fair value. So from the weekly chart, this is the next fair value over here and over here. So that's what we draw in this horizontal green color lines, this one and this one. Then with that understanding, today in the New York market, when we were taking the live trade, what we had a look was, then we looked at the now yeah, we had a look at the daily volume profile chart. So this, in the right hand side, what you see is the daily volume profile chart. Let me again double check if the live stream is working, up and running. Okay, let me check it, guys, give me a second. So I need to make sure, you know, this is not getting disconnected. Yeah, all good. Okay, so now then, looking at this daily chart, what we noticed was, again looking at the weekly chart, this retracement, this price push up is what you see here in the daily volume profile chart. This is the daily chart, and this weekly push down over here, right? This weekly push down is basically what you see over here in these daily candles. Now from the weekly chart, we figured out the fair value is in this area, this green line and this green line. So what that means is, when we look at the live market in the New York session, when the price was in this area, right over here, so then we notice our possible fair value are below this candle. So which means further down, the possible fair value this and this. So that is how you decide your bias, like the direction for the day. So that is how we decided the direction for the trade for the day. You call it as the daily bias as well, to be bearish. Now you need that high level daily bias, high level direction, because if you want to take a proper trade, you need to make sure the global picture, or the big players, institutes, big banks, large hedge funds, you need to understand where they are, what is their direction, right? So what is their trade direction? So that is how you understand the trade direction of large institutions and big banks. So when we identify the possible liquidity zones or the fair value zones, we, in the daily chart, when we mark them over here, then we have a clear idea of possible price direction. Then after that only, we will be going into the 30 minutes chart. So now I will take you to the 30 minutes chart. Okay, so let me take this chart. Let me keep this chart away over here. Okay, and now we are in the 30 minutes chart. So again, I need to make this chart a little bit smaller. Hold on. Yep, this one, I need to make sure that you are seeing the entire chart area. Give me a second. So this one, yeah, all good. I'm bringing it little towards the left so that you can see the full chart. Let me bring it more towards the left. Okay, so yeah, you are seeing the full chart. That's amazing. So let me bring it over here. Right, so now after that, after determining the direction from the weekly and the daily charts, now you are in the 30 minutes chart. So this is the live market, the most recent price chart. So what we did was, then for this 30 minutes chart, we can see this price, this area is in a range. So for the last 2.5 days, you can see the price is in a range. Now when you see a range, what that means is it's fair value. So this range is the fair value for the price. Now what you have to understand is, price always like to stay in the fair value, because that is where big players do their accumulations of big trades. Now, so when you see a range which is a price balance, so we call it as a balance price, then what you do is you draw the volume profile using the volume profile tool. You can use the market profile and TPO, this one, and you just click and draw into this range. Now the question is, why are we drawing the volume profile to this range? The answer for that is, we need to find in this range, we need to further refine the fair value. So which means we need to find in this range the fair value, what's the value area high, what's the volume point of control, and what's the value area low. So we draw this volume profile. When you draw that volume profile, you can see for this area, this is the value area high. So this value area is this ash color area. This is the value area high. Then you can see this line over here, the black line is the volume point of control, and this is the value area low over here. So now we further refine that range into a value area, because the price like to stay in the value area and does the accumulation. So you can see majority of the time the price was in this ash color area, and it goes out. If it goes out of the value area, it bounces back. It goes out, bounce back towards the volume point of control, and most of the time it spends in the value area. Then again, if it goes out, it's a false breakout, again bounce back into the volume point of over here. Also false breakout, again bounce back to the volume point of control, again false breakout, bounce back to the volume point of control. Okay, so now when you see the price has been in a range, and when the New York market opened today, the price 9:30 a.m. New York time, this is over here, we notice the price is above the value area high over here. But looking at the past 2.5 days, the price is bouncing up and down within this value area, and you can see at 9:30 a.m. New York time, it started printing these bearish candles over here. So what that means is, then it shows that there's a possibility that the price now could attract like a magnet towards this volume point of control. So now why are we thinking like that? Why are we looking that is because now looking at the weekly volume point of control and the daily volume point of control, if I bring it back to you, the weekly and daily volume point of control, we determine the possible bias of bearish. So because we are targeting this volume point of control and this volume point of control, the fair value, and when the day start in the daily chart, this is where the price was. So because we are targeting and because of the bearish market structure, you can see the market structure is bearish, right? If you look at from a pure candlestick viewpoint, the market structure is bearish. So the market is showing bearish signs. The market structure is showing bearish signs. And the daily chart is also showing bearish signs. And we determine potential fair value where the price could act as a magnet, which means a previous week volume point of controls. So because of that, the bias is bearish. Now after that, again looking at the 30-minute chart over here, at 9:30 a.m. today, live market, New York time, when the price was sitting in this area, and when it started printing these bearish candles in this area, and looking at this price balance area and looking at the fair value where the price like to stay, and also with the bearish biasness from weekly and daily charts, then our trade decision or the direction is to take a short entry at the New York start in the micro-mini Nasdaq index futures chart. So now our goal was to take a bearish entry. So our goal is to take a bearish entry over here. With that understanding and with the fair value being marked, now you go into after understanding the overall, we mark in this area, the value area high, we mark with this green color line, volume pointer of control with this green color line, the value area low with this green color line, so that you can see them in the 5-minute chart. So now we have 5 green color lines. The first top 3 are for this range, value area high, volume point of control and value area low, and the bottom two ones are the weekly previous week's volume point of controls where the target is. So if we take a trade, a short entry over here, then we target, I will again show you. So if we are to take a short entry here, bearish entry from here, because of this range and the volume point of control and the fair value, so the price loves to go as a magnet to the fair value, which is the volume point of control, plus on top of that higher time frame direction. So again is bearish. So again taking you, if I take you to the weekly and daily charts, volume profile charts, because the bias is bearish, if we are to take the trade, now this is that area of 9:30 am New York time, the price was in this area where I move my mouse. So then with the bearish biasness and with the higher time frame bearish fair value directions, that is where you determine, okay, today's New York session trade is going to be a bearish entry. So now with that idea, what we did was we went into the 30-minute chart, as I said earlier, and figured out the value area. However, to refine the trade entry, what we did next was we went into the 5-minute chart. So now I will bring you the 5-minute chart to complete this picture, right? So now in the 5-minute chart, so let me bring it over here, and I need to make it a little smaller so you can see the full chart, right? Okay, so now I'm in the 5-minute chart of the micro-mini Nasdaq index futures. So this is that area 9:30. If I show you over here, this is 9:30, 9 o'clock, 9:30 am New York time, the area I was showing you earlier in the 30 minutes chart. So this area, what I show here is basically this area over here at 9:30 over here, where the bearish candles were printed in 30 minutes chart. Then if you look at that same area, when we look at that same area at today's New York market 9:30 am, when we see this big bubble, so what are these big bubbles? These are big trades. So if you have followed our channel and seen the previous videos, you would have seen we explain these big trades. So these big trades are large institutions, big banks and smart money placing their orders. So when you see large red bubbles, what that means is big sellers are in action. So we can see from 8:30 am the forex market starting time, and then moving towards 9:30 stock exchange open time, you can see in that whole time period it's being dominated with red bubbles and some green bubbles. However, you can see majority of the dominated bubbles are red bubbles. What that means is big banks, institutions, large players, smart money are heavily bearish in this area. And you can see the price action is also bearish. You can see it makes lower lows and lower highs in this area, in this smaller area, in the 5-minute chart. So now I'm in the 5-minute chart. So now looking into the 5-minute chart also at 9:30 we can see bearish signs. However, remember, we don't take the trade at 9:30 New York Stock Exchange start time. We at least give 10 to 15 minutes time buffer to see what the price is doing, because the price can do anything. Even though our analysis is bearish, the price could make a bullish move. So we give that 15 minutes time frame, and at 9:45 am, this is 9:45 am New York time, you can see the price by 9:45 am price started to push heavily down. You can see strong push down, and when the price pushed down, you can see this green line, which is the value area high of that range, 30 minutes range. You can see the price moved by 9:45 am, exactly at 9:45 am, the price moved down towards the volume point of control in that range. Now what that means is price act as a magnet, price reached the fair value in that 30-minute range. Then at 9:45, since the price already reached the fair value, and also the volume point of control, since the price reached the volume point of control, which is the fair value, and also now we can see at 9:45 it started to print green bubbles. Now these green bubbles are big buyers. So you can see, because the price is moving up and down. If I show you back the 30 minutes chart, the price tends to move from value area high into the value area low, towards value area low. So from value area high, volume point of control, value area low. Again bounce, value area low, volume point of control, value area high. Again bounce back, value area high, volume point of. So it's going up and down. So, and when the price reach the volume point of control, there is a chance where in some instances where the price, for example, if you look here, from the value area high come to the volume point of control and bounce from there again up. It can happen, it could happen, because the volume point of control is where the heavily trades are taken. So it may not go down towards the value area low. So we have to look into those signs. Now, because that possibility is there, when we look at 9:45 a.m. New York time today in live market, we notice in the value area, the volume point of control, this green line, we notice big buyers are in action, which means large banks, institutions, smart money, some of the buy trades are being triggered. You can see, however, now because of these buy entries being shown, our bias is bearish and we want to take a bearish short entry. But when we see these green bubbles, we don't enter into a short entry because it's risky, because of big buyers are now in action. Now, however, there's something very important to notice here. That is, even though the big buyers are in action here at 9:30 a.m. live market, you can see they could not push the price up, meaning the big buyers are unsuccessful. So the aggressive buyers, the green bubbles, aggressively try to push the price up heavily. However, you can see the price moved up towards the value area high and again started bouncing down towards the volume point of control. You can see that's what happened over here at 9:45 a.m. and you can see around 10 a.m., 10:20, you can see at 10:30 a.m. when we were analyzing the live market, we noticed this large bearish candle supported with big sellers, red bubbles. So what that told us was, okay, the big buyers, aggressive buyers tried to buy and push the price up. However, a lot of wicks are formed and the price bounced from the value area high towards the volume point of control of that 30 minutes range. So what that tells us is the price is acting as a magnet towards the downward direction. So this is what we understand by analyzing this market. And also this red color bar over here is a bearish stacked imbalance. What that means is strong aggressive sellers have pushed the price down. And when we see the aggressive green bubbles fail, aggressive buyers fail, and when we see with compared to these green bubbles with smaller red bubbles, aggressive sellers were able to push the price down. So with a small effort, aggressive sellers are able to push the price down. So what that tells us is the buyers are failing. So if the big buyers fail, what that tells us is there's a possibility where there are stop orders to get triggered, because if they take a buy entry here, their stop orders will be below this volume point of control. And so if aggressive sellers push the price down, these stop losses of the buyers will also get triggered, which will fuel the price to further go down. So that is what you see in this area with this large red bubbles printed, which means big trades, big sellers printed. So what this tells us is, okay, overall price is bearish, weekly, daily bias is bearish, we got targets in the weekly and daily direction, and 30 minutes chart range, the price moved down, and price from the 30 minutes value area high, the price is pushing down towards the 30-minute chart volume point of control, and big buyers fail in that area, which means all that tells us is sellers are in control. So that is how we determine, that is how we got extra confluences for our sell entry. Now the question is, where did we take the sell entry, right? So basically, when you see this large red bubble printed with this story, there's a potential, there's a possibility when the red bubble printed, the price to move further down. Why? That is because if you look at this price move over here in the last 2.5 days in the 30 minutes chart, the price is going up and down, and our direction is bearish, and the weekly and the daily charts market structure is bearish, right? So with all that, now to give you the final picture just before we take the trade, if I again bring you the daily and the weekly charts over here, okay, weekly market structure bearish, we got targets, fair value below the current price, daily price action is, you can see, pushed up, pushed down, and if you just look at this most recent price action, huge bearish candle, huge price push down, and for that bearish candle push down, if this is the retracement, and the retracement in the daily chart came to one of the previous days volume point of controls, which can now act as resistance in this area, right? So with all that, and with the bearish direction and going to the 30 minutes chart, right? So this is the important part. Going to the 30 minutes chart and seeing the price in a range, bouncing up and down, bearish candles printed towards the volume point of control down, and then going into the 5 minutes chart and then seeing aggressive selling happening, bearish market structure down, and aggressive buyers in this volume point of control area failing to push the price up, and with minimum effort compared to aggressive buyers, aggressive sellers are successful in pushing the price down, large candles, bearish candles printed. So this gives us the confluence to enter into a sell entry. So where we enter into the sell entry is in the 1 minute chart. So now what we did at that time was we entered into the 1 minute chart. So this is the picture of the 1 minute chart at that time interval, where you can see this is 10:30 AM, that time period what I was talking to you. You can see in the 1 minute chart, micro mini Nasdaq index futures, there's plenty of bearish stacked imbalance bars printed, the red color bars, and you can see aggressive sellers are in control. So the moment you see the aggressive seller over here, this big bubble pushing below this aggressive buyer, right, and pushing below the volume point of control of the 30-minute chart. So this middle line is in this 30-minute chart, this volume point of control here, over here, the middle line. So at what's the time here? So at 10:40 AM over here, 10:35 AM, you can see the price pushed strongly below the volume point of control of the 30-minute chart, and that price push is strong because it also broke the aggressive buyers. So the aggressive buyers who were here are at a loss now, and their stop losses could get triggered, which can fuel the price to go further down. Again, when I say further down, what I mean is first target is the value area low over here, first target. Then the second target, where are the second and the third targets? Second and third targets come from the daily and the weekly charts. So coming back to the daily and the weekly charts, so at the moment, if you look at here, the weekly chart, this is the weekly chart. if the price is over here in the 1 minute chart, so from here I said the first target is the value area low, then the second target is this volume point of control of the weekly previous week fair value, then the third target is this volume point of control previous week, because that's the fair value where the price will act as a magnet, right? And the bearish market structure. So with that understanding, that is how you determine the target directions, the targets, right? So if we are to enter into the trade from the volume point of control, bearish entry, then we got multiple targets. So based on that, that is how you determine, that is how institutional level traders, as institutional level traders, that is how we determine our entry locations. So based on that, when this big bubble printed, that's where we place our sell limit order. So you could place in a live market, you could place a sell limit order or a sell stop order based on where the price is. So this is all a market order basically. So we placed our order over here, sell order, and our stop loss is above this big red bubble, because this aggressive seller should get protected. Because if we are entering to the sell entry here, if we are right, the price should go down. If we are wrong, the price should take us out. But we should not wait for a longer time until we get stopped out, because then you are losing a lot of money. You will go into a larger drawdown. So when you are wrong, you should be wrong quickly. When you are right, it's okay for you to take time for the trade to develop. However, if you are wrong, we should get out of the trade as quickly as possible in a logical location. So the logical location is, for the price to get protected, is this red bubble where the aggressive sellers started action, because the failed buyers are also here. So because of that, we place our stop loss just above this bubble, and our first target, we did not target the full trade first. So the first target, basically, if I bring back where we took our first target, was over here, just above the value area low. Because again, taking you to 30-minute chart, if the price is bouncing up and down, our targets are value area high or value point of control or value area low. Now in this scenario, the target is the value area low, because we are looking for a bearish entry. So because of that, our first target is this green line, the value area low, which is around 1 to 1 point, almost 1 to 1.4 when we were targeting 1 to 1.4, like almost 1 to 1.5. So we took our first take profit, partial profits for a 1 to 1.5 approximately in this area, and we left the rest of the trade to keep running. And you can see why we kept the rest of the trade keep running is, we can see in this price push down, you can see the sellers, aggressive sellers, are heavily involved. Not only that, you can see the cumulative volume delta, CVD, is bearish, negative. And also you can see this price push down, breaking this volume point of control, is backed with high volume. And so we got high volume, we got cumulative volume data negative, you got the delta print negative, which gives us an indication where this could be a strong sell down, and also especially looking at the weekly and the daily targets. So because of that, we left some part of the trade to keep running further down. And then where did we exit the trade in full, right? So we exit the trade in full, we kept the trade running until we see all these red bubbles. We kept the trade running because that gives us an idea that the trade is, the sellers are in action. However, when we see this green bubble over here at 12, that is where we were concerned about the trade, and that is where we took our next take profits. However, we had to wait to see until this green bubble printed, that means aggressive buyers, because that could mean the price, the push down is over, and that could mean the price is now again starting to retrace up. And before I come into that, I will show you one other thing of our analysis. So if I bring you the this is the dealer hedging chart, which is pretty interesting for you guys. Let me bring the dealer hedging chart. So while we were looking into this trade, analysis over here, let me just zoom it for you guys can see. So this is the Nasdaq hero chart over here. So this one, if you look at the time 10:30, 10:40, that price time period where we were taking the trade 10:30, you can see this purple color line is the dealer hedging line. You can see the dealer hedging, the dealers, the large dealers, the market makers and the dealers at that time 10:30 am, you can see is heavily bearish, this purple color line. And you can see at 10:30 am it's minus, if you look at the scale, it's minus 1.1 billion minus negative 1.1 billion bearish dealer hedging at this moment, if you look at the scale in the right hand side. What that tells us is the dealers are heavily bearish, right? So if you followed us in this channel, some of our previous videos, we explained this dealer hedging, right? Basically what that tells us is, okay, the market is bearish. Nasdaq, not only that, if you look at the S&P 500 chart, dealer hedging at that same moment, if you look over here, you can see S&P 500 at that moment is also heavily negative. At 10:30, it's heavily negative, minus 1.6 billion negative bearish dealer hedging. So dealers are heavily negative, dealers are heavily bearish at this given time, right? At that exact time where we were trying to take the sell entry. So if market makers and dealers are heavily bearish due to their hedging requirements, right, for them to balance their risk, right, of market making. So if dealers are bearish, that means for them to hedge, right, they will use the futures market and hedge their entries. So when the dealers are hedging their entries in a bearish direction, right, in the futures chart, that means there's a possibility the futures market also will go down because of heavily minus 1.5 billion negative dealer hedging. So which causes the futures market, because they are using the futures market to hedge, so dealers will take sell entries. That's why the dealer hedging is bearish at this stage. So if dealers are taking sell entries, bearish entries, then the futures market also could go further down. So analyzing the dealer hedging gives us extra confluence of that potential sell entry which we took as extra confluence. Now I will take you back again to the 30-minute chart. Let me keep it like this, 1 minute chart actually. So if I go back to the 1 minute chart, you can see we kept the trade running after the first take profit, and you can see it's aggressive sellers are in action all the way, red bubbles. But when we see the green bubble printed, that means aggressive buyers started to come back with positive delta, and you can see the cumulative volume delta is also started to become positive. So which means it's a bit risky to hold the trade, because there's a chance the price could like going up and down. If I show you again earlier, there's a chance where the price could go up and down. So when we see that, and especially this over here is going to be in line with, so the price over here is 25,000. So if you look at 30 minutes chart, you can see at that moment the 25,000 range is at the bottom of this range over here. So which indicates us the price is now also at the reacting to the bottom of this range, 25,000. You can see the price point, 25,000 price point. So if that is the bottom of the 30 minutes range, then there's a chance where the price now could shoot all the way up, because it's, as you see, it's going up and down in this range. So at this moment where we look in the 1 minute chart, the price is over here, as I said, at the bottom of the range. So that also tells us, okay, it's safer side, it's better to exit the trade. So this is where we exited the trade for a remarkable 1 to 4 winning trade. Now let me summarize the overall picture to give you a better idea. So one other thing is, now if you look at the overall price action in the 30-minute chart, even though we exited our trade at price point 25,000, you can see the trade kept falling further down. However, we are not going to capture the entire price move, right? We need to, as traders, we need to capture a part of the bigger price move in a logical, which makes us logical sense to us, right? That's what we were explaining to you, how to make a trade with logical backing, with logical reasoning, with a logical sense, right? So now looking at this overall picture and seeing this market analysis. So why we gave you this market analysis is, this is today's price action, the most recent live price action. So this, if you follow us carefully, this trade breakdown will clearly show you how, as institutional level traders, we analyze the market and we tackle the market, and how we use these concepts for making profitable trade entries. So this was a remarkable 1 to 4 winning trade, risk reward winning trade, using order flow concepts, volume profile concepts, and options flow concepts, and also using the secret sniper big trades indicator. And these techniques are used by world top class traders. So I hope this was a very insightful trade session for you guys, right? And overall, we understand, right, that this may be a bit overwhelming for you all. However, it could really help you to make a potential trade entry. And so there's a live Ron, you're asking about the GEX. Did you incorporate this in the trade? Yes, we incorporate the GEX. I will show you quickly to answer that question. Yes, we incorporated the GEX. However, just to keep it short, we kept the live, pre-market trade breakdown simple. However, we looked at not only GEX, we looked at a couple of things, Ron. So GEX, also we look at the net OI, especially we look into the 99% strike levels, right? We looked at that, so at those price points. So to answer your question, yes, we had a look at the GEX. We were looking into 99-point strike levels. Also, we were seeing the stability index is low, so which means the price is the market is very volatile. And also, not only GEX, we look at gamma exposure. And also we looked at the time when we look at the gamma, we saw negative gamma, which means also we looked at delta pressure. At that time we saw negative delta pressure supporting our trade ideas, right? So yes, to answer your question, Ron, yes, we use GEX and net OI and volatility stability plus gamma and delta pressure. And towards the end, we also look at charm pressure to see where the price could park at the end. So overall, yes, to answer your question, we had a look at that as well, right? So hope this was a very insightful trade session for you guys, and if it helped you, I hope it gave you some insights. We are not on point today. Yeah, so I can see your comment about the other levels, Ron. Also, we looked at the gamma levels, which I did not, show it in the live trade, but yeah, you are on point. Okay, so everyone, so it was a great live session with you all, and hope it makes sense and insightful sessions for you. We'll make sure to give more live trade breakdowns, in future as well. And so wish you all the best in your trading, and take care until we see you with another live trade. Take care.